Hello and welcome to Lone Investor. So once again, I did nothing today. Both the S&P 500 and NASDAQ seems to have a little bit of rebound today. So today NASDAQ has a high closing, but in the hour chart compared to yesterday when it reaches the 13.7k area, there is less volume, although the momentum is still going up at the moment. And the next big dates to watch out for is May 3rd and 4th. The next CPI data will be released on May 11th, so it will be after the FOMC meeting. So during this FOMC meeting, the Fed will probably sound hawkish again for the 8.5% inflation rate, and they will be talking about rate hikes. So maybe before or on the day of announcement, we may see the market hitting the 13k area. And currently, there isn't really much data that is supporting a rally for the market. So if the market does manage to go up, I think the maximum point we'll see will be hitting the top resistance line here, or it may get rejected at even lower price at the 14.2k area. And if people were to price in ahead of the FOMC meeting, we might see the market coming back down, test the 13k area before the meeting. So if NASDAQ managed to hit the first resistance, I might sell some of my stock, such as HUD and the Omawa. I might sell part of it. And if it somehow managed to go up to this resistance, I may use some cash to buy in reverse ETFs such as SQQQ as a protection against my remaining shares. And next CPI data will be in May 11th. And as mentioned, that one will be based on April. And then the next one will be on June 10th. And if inflation rates manage to come down, then the FOMC meeting in June, with the two consecutive slowdown of inflation rates, the Fed may be dovish again. And that's when I believe we will truly see a market rally on the stock market. And yesterday I also mentioned the bond yield is close to its resistance line. So when the drop of the bond yield benefits the stock market, and with the possible lower rate hikes in the June FOMC meetings, both of these will benefit the stock market. So around mid-June area, we might see the stock market breaking out of the top resistance line. So as mentioned, in between, we might still see some consolidation within this range until the June meeting starts. So that is my thought on how the stock market will play out for the next 2 months. A quick look at the oil. So oil did hit 104 today, and it seems to be getting rejected at the moment. And with Shanghai in lockdown and they're importing less barrel per day, so in the short term, we do see the oil getting pulled back. And as for the inverse oil ETF, SCO, I was looking at the double bottom and I set limit buy of 4.9 and the lowest it got today is 4.95, so I did not get in today. So I'll see how this plays out first. And as a reminder, a long weekend is coming, so for 3 days, you can't do anything on SCO. Something might happen during the long weekend that will fluctuate the oil price. As I've said, oil is very sensitive to geopolitics news, so that is something to watch out for if you have decided to enter the reverse oil ETF. And as for Bitcoin, it's still in consolidation range. So right now it is in between a resistance and support line. As I've mentioned, Bitcoin nowadays pretty much follow NASDAQ. So if NASDAQ will have a run up towards the resistance and get rejected, Bitcoin will most likely to have rejected again. We might see hitting the resistance line again at the FOMC meeting, as I mentioned, in May 3rd or May 4th. And the earliest date for the start of a market rally will be in mid-June. So mid-June will be almost at the end of this consolidation flag. So if the market has a one in mid-June, we will most likely to see Bitcoin to have a breakout of this consolidation flag also. And a quick look on the dollar, I was mentioning the possible 101 resistance, and yesterday it hit as high as 105. And right now we see the dollars climbing back up, so we might be able to see another try for the 101 target zone. And if we see a lower RSI, then we have a more clear picture on a divergence marking the top of the US dollar. And today I also want to cover a little bit on gold. So I've talked about gold before in one of my videos, saying it's showing a cup and handle pattern. And the possible breakout will be in time with the recession, and the Russia-Ukraine conflict really accelerate the breakout possibility well ahead of recession. And since beginning of the year, we see fund pouring back in gold and also on Bitcoin. So if gold passes the 2050 mark with a strong green candle, then it will be more of a confirmation for breakout. And a strong support for gold price still remains near the 1800 to 1900 area. So currently we're in the middle between a breakout and a support line. So if you do not mind holding gold for some period of time, it is a good protection against recession that is coming up. And as for gold stocks, before the the ABX, the Barrick Gold, I've also mentioned a penny gold stock that has some potential, and the ticker symbol is LVX for Canadian and LVXFF for the OTC market. So if you're interested, you can check this video out. And this is it for the market update today. If you like the video, subscribe and give me a thumbs up, and I'll see you guys next time.